This is the Twin Cities Real Estate Investing Show. Real stories, real success in Twin Cities real estate. Join your hosts, Adam Tafel and Tim Swierczek, as they dive into the world of Twin Cities real estate investing. Together, they share valuable insights and practical tips to help both new and seasoned investors navigate the Minneapolis-St. Paul market. With a focus on relatable stories from real people, this show will empower you with the knowledge and confidence to thrive in your investing journey. Guys, take it from here.
What's going on, Tim?
Hey, Adam, how's it going?
It's going all right, man. Successful meetup last night, yes?
Absolutely. It's cool to see that many people excited about multifamily in the Twin Cities.
Totally. I think we probably had 17 to 20 people in the room. And at one point you mentioned, hey, how many of you guys know that we have a podcast? And half the hands went up. So shout out to the 11 of you last night who like this podcast. We really, I mean, this is like probably my favorite professional thing that I do right now is this podcast with you. So
yeah.
But we also don't get a ton of feedback, right? Like we kind of just put it out into the ether
and yeah, it's not a conversation, right? Yeah, it's a one-way street.
Well, we get minimal data from Podbean. So anyways, if you see us in the real world and you mention that you like the podcast, we like that.
That's what I'm saying. Good. Yeah. Yep, absolutely.
So Tim has put a lot of time, emphasis on a lot, into Minneapolis data. Why don't you tell the folks what you've been up to?
Yeah. So I think one thing I'm going to direct you to is the show notes of the show is going to have things that you can download so you can visually see what we're talking about. If you're able to listen to this while you're in front of it, I think it'll be helpful. We're going to try to keep this short and to the point and then let you kind of go over the data. And you can reach out to either Adam or I individually if you've got questions about the data or you want us to kind of interpret it with you, that kind of thing, right? Let's start out with a little bit about the Twin Cities in general. So in the last 12 months, there have been 861 2 through 4 unit transactions in the Twin Cities Metro. And that's our definition of Twin Cities Metro. So, you might come up with, 850 or 900, right? But the point is 961 is what we're analyzing. Out of those 961, 729 were duplexes. 85% of them were duplexes. 3 units were 7.5%, 65 total properties, and 4 units were also about 7.5%, 67 properties. So essentially, I think it's pretty clear that for those of you who are looking for a triplex or a fourplex, you have to be pretty aggressive to get one, because if you just kind of assume there's going to be another one coming up and you're in some random suburb in particular, I think you're going to find that like half of those or so fourplex transactions were in Minneapolis. So and a third of the rest were in St. Paul. So you've got if you're in Columbia Heights, for example, and you got a fourplex, it could be the only one in that sells in that city that year. So if you find one in an area go strong and go heavy for it.
Totally.
Going to the Minneapolis side of things, out of the 861, 444 of those were sold in Minneapolis. And here's a real difference. So St. Paul, for the record, was somewhere in the neighborhood of 262. So it's nearly double. 2/3 Minneapolis, 1/3 St. Paul, and then, half Minneapolis, a quarter St. Paul, and then a quarter of the rest of the Twin Cities. Something like that, right? The median sale price in Minneapolis is substantially more than St. Paul at $432,500
for all 2 to 4 unit multifamily.
For all 2 to 4 unit multifamily, and the average price was $467, a little bit more than that.
What was St. Paul's average? Do you remember?
Oh, it's like closer. I can look it up. It was in. Let's answer that correctly here, and it'll just take a second. It was 359 was the average, and the median was 320.
So yeah,
so you're
25%.
like you're a solid $100,000 more.
Yeah.
Less of a deviation too. So the standard deviation in sales price is 168 in St. Paul. It's 202 in Minneapolis, and that just really tells us that there's a bigger variance in Minneapolis over St. Paul, right? more outliers is maybe another way to put it in that deviation. So the minimum sale price, we had one sell for $99,900, and the maximum was $1.6 million. So there's a bigger range too. That range in St. Paul was 105 to 1.3. So
I think that 1.6 million was a fourplex of like row houses in the uptown area. Okay, if I remember it correctly.
Yeah,
it was on the market for a while, but it did eventually sell.
Yeah, so we've got duplexes make up 372 of the 444 in Minneapolis for 83.78 share, which is nearly identical to St. Paul. I think this is an interesting stat. St. Paul was 83.52% versus 83.79. So essentially the same number, right?
Sure.
84% if you want to be close, which the average in the Twin Cities was 85. So they all kind of track right in that same range. The other thing is for duplexes, the median price was $405. If we go to 3-unit properties now, here's what's probably interesting. Most people, they come to me, they want a 3 or 4 unit. They don't want a duplex because they want more units. Well, the sales count was only 31 in all of Minneapolis. So only 7% of all transactions, and the median price jumped up to $550. So you have to pay typically you have to pay $145 for that extra unit. So you better be getting some bedrooms with it. And that is one area that I found in St. Paul, it was very clear that 3 units stood out as a good deal. In Minneapolis, it's not that clear. Lastly, I'll just go to the 4-unit properties, 41 total sales. It's 91, a little over 9% of the market share, but the median price was $640. So these things get pretty expensive pretty quick when you get up there in units. And so I, as a general rule, I would focus on bedroom count over unit count in these smaller properties. But we did find there are some triplexes and fourplexes with bigger bedroom counts that really work. It was just those smaller bedroom count triplexes and fourplexes didn't look very good, with the exception of one particular property. If you are looking at a duplex with just all 1-bedroom units in a low-end neighborhood, meaning Phillips West, Powderhorn, Seward, or Wyndham, those properties looked like they performed pretty well. But outside of that, the rest of them were not very good buys.
Okay, so you are a Twin Cities landlord, Tim. Tell me about major takeaways. I guess you just started explaining that, but I'm looking at this table of rent to price ratios in order of best to worst, and it's clearly North Minneapolis, the Powderhorn central area of South Minneapolis. How far down the list until we see something in Northeast?
That's a good question.
Holland is number 4. Now, also, folks, there's going to be outliers. Maybe we should tell
quite a few. Yeah, we should talk about that because I think there's some noise in this data.
Yeah. Well, yeah. Why don't you go into that, Tim?
Well, I looked at it. So first of all, when you look at this list and you download it, you're going to notice there's quite a few properties that meet the 1% rule. I want to be real clear how we did this. We took the sale price that actually happened, and then we took the median rent that you should be able to get. Not necessarily what the property is getting now, and certainly not even what it would get in the current condition. We're assuming you need to get it up to median quality. So if you look at these lower sale prices, some of these properties are going to require quite a bit of money to get them to this point, and that might not be a good buy. So this is just to look at a market and what's possible. Then you're going to have to look at each individual transaction and figure out what you should do. But it gives you a target, right? So, for example, let's say you find a Holland duplex that has for $400,000 that's got 6 bedrooms. That should be able to pull in a little like $4,100 in rent, just under $4,100 anyway. If you can make that happen, you should buy that property. Okay. So now the question is, okay, I just found one in Holland and just found it for this price. Can I get it up to $400,000? If the answer is yes for any reasonable number, that's a good buy. So that's what this data is going to tell you, right? Not necessarily that you're going to search the MLS and find a bunch of properties that look like this. It's more like, okay, I'm looking in this neighborhood. I see the price, the median price. I see the median rents. Can I find a median property, basically, or can I make a transaction that way?
And we've been telling our clients for years, as you know, a lot of people come into this brand new and they're analyzing everything as is, right? As it sits. And nothing works, nothing cash flows. And so, using the potential rents is so important, or else, you know, no one would ever buy anything, I would argue. I don't know when the last time I just saw a multifamily property that didn't need work, where the numbers made sense as it sits on the MLS, right?
Yeah,
I think
almost never, right?
once you start getting into the, I don't know, $1 million range with buying properties, then you can start to enjoy some income out of the gate.
Yeah.
Right?
Yeah,
But not in the small multifamily land, certainly.
Yeah, and so here's another thought. The overwhelming number of majority, so what did I say, like 372 of the duplexes were duplexes. Out of those 372, 150 of them are 4-bedroom duplexes. Two bedroom units on average, right? Most often. And then 57 of them are 5-bed and 77 of them are 6-bed. And if you start looking at this sheet and when you download it, you'll see, if you start looking at rent to price ratio, the concentration increases quite a bit when you get to 5 and 6 bedrooms. So if you can find a 6-bedroom for a reasonable price, for the median price, you've got a really good shot in quite a few neighborhoods, including like, so I don't know these neighborhoods as well. Adam, isn't Kingfield a pretty decent neighborhood, or is that not? What are we talking for Kingfield?
I would say, obviously it's all relative in my opinion, but I would happily live in many parts of Kingfield with my family. My parents lived there for years. Kingfield also kind of spans, like part of Kingfield feels more like Lindale and like higher crime uptown areas. Okay. And then part of Kingfield feels a lot like East Harriet with lots of owner occupants and maybe a median single family of 5.25, 550.
Well, so Logan Park is a northeast. I recognize that Logan Park, and so that's a northeast park. That one, same thing. You've got a real nice potential. You know, median price there is $325, but a 6-bedroom in that neighborhood will pull in about $4,200 in rent. Median rent, again, you know, it's got to be in good condition, but that would be an excellent buy if you can find that property.
Another way that people can use this information, Tim, is let's say we go all the way down. What are some of the worst performing neighborhoods as far as price per rent ratio? Why don't you list me a couple?
I just saw one. East
Harriet would definitely be one, because like
Kenwood.
Okay. Well, let's take East Harriet.
Kenwood 6-bedroom. All the 6 bedrooms pretty much are like high mid 80s and up, except for Kenwood, it's 55%.
Let's actually take East Harriet because that's a more realistic example. The odds of anyone listening buying a duplex in Kenwood, I think, is pretty low.
Yeah, okay.
So in East Harriet, you get a beautiful up-down 20s duplex with all the built-ins and a massive floor plan and all of that cool stuff, and you're paying $657, $750 for it.
The median is $728. Median. Okay.
So
obviously, I'm talking 6-bedroom though. So again, these are 6, yeah.
And most of them are going to be 6 that you're going to look at. But then what do they rent for? Maybe that 3-bedroom unit is going to go for 22 to 24 based on my experience.
Yeah, 2206 is the median. So yeah, you're right.
Okay.
Yeah.
So that's not great. But if you end up, so now you can take this information but this is such a great neighborhood. You'd love to live there. Let's say you got like a couple of toddlers, but you want a house hack.
Yeah.
Or you want to, you just want a cool ass house. East Harriet would be such a great lifestyle in my opinion. And so if you find one and you're not really loving the numbers, now you're going to understand, if you can get one in the 6s and you're far over our median price to rent ratio for the neighborhood, honey, let's just pull the trigger. It's not as good as other neighborhoods, but it's way better than median, right?
And this goes along with the whole the opposite side of that coin, where I said that like a lot of these places probably need more work to get them up to median than they're worth. They're bad investments in these low end neighborhoods. In these upper end neighborhoods, some of those people had super high pride of ownership and really kept them up. And those places are gorgeous and they're nicer than median. In which case, you might get $2,400 a unit instead of $2,200 a unit, and then that extra $400 a month. Aggregate would make the deal worth it for you, right? So definitely this is supposed to give you overall big picture and some things to target, but definitely every single deal still has to be analyzed on its own.
And from a house hacker's perspective as well, some of these higher end neighborhoods and higher priced duplexes, you could make a family home out of for much longer than living in Holland, Northeast, right? How long is a family of 3 going to last in Holland in a 2-1 bath as opposed to a Kenwood 3-bed?
Yeah, and so Holland, I'm just trying to look at where it is comparatively, and that's a pretty, I mean, it's right on the part of Northeast where it starts to get more north and less south, and I think the fun stuff's more south, right? Like,
yeah,
the stuff where people want to be is, Holland's just on that border of it. So yeah, I mean, you're right on there. It's obviously, and also, I mean, for Northeast too, it's almost like there's that line where it's not bad, but there's that line where there's a lot of fun restaurants and cool things. And it's right in that Logan Park, Holland, Wyndham has some of it. And then it's all around the Arts District in Bottineau, Sheridan, right? St. Anthony West, that kind of stuff too.
Before we move on to appreciation data, and for those of you who were at the meetup last night, we didn't get into appreciation. Tim had spent so much time on this. I was not super helpful, and we just didn't have the numbers crunched. But we have gone through by neighborhood. We've taken the median sale price in January of 2015 and compared it to the median sales price of January 2025 to have an average 10-year appreciation figure by neighborhoods. Now, what I hear all the time from investors, all over the country really is, are you investing for appreciation or are you investing for cash flow? What kind of market are we in? And these results are probably going to surprise most people, wouldn't you think?
Mm-hmm. Yeah. I'm looking, Adam, help me out. Where's Hawthorne neighborhood? I'm looking for it on here, and
Hawthorne is North Minneapolis.
North Minneapolis, okay. Is it a part of North that we like more than don't like, or is it further north? I'm not seeing it on this sheet that I'm looking at. Oh, there it is.
What are you trying to accomplish?
Well, I saw that there were some. I just saw it came up on the list. There are 11 transactions with 4-bedroom duplexes, and they all seem to, their median numbers were real strong. So, cool. I guess that's an area if you want to be a landlord and you don't mind. There's a lot of transactions and they tend to work, but they're also probably homes, I'm guessing based on where I see it on the map, that are pretty beat up. They need TLC. They might, to get to median rents, you're probably doing Section 8.
Well, let's talk about I've got Hawthorne appreciation right in front of me.
Okay.
165% over the past 10 years for median sales price. 10 years ago, the median sales price in Hawthorne was $94,000. Today, it's $250,000. That makes it the second best appreciating neighborhood in all of Minneapolis over the past 10 years.
And it cash flows. So, but let's be clear. If you're looking at a spreadsheet, that is not one of the easiest areas to manage in. Right?
Totally.
You're going to see more crime. You're going to just see, less people pay you, all that kind of stuff, right? You're going to come up with those negatives.
Eviction rate.
Yeah,
lawyer fees, all that kind of stuff. But it can't be ignored. I mean,
that's probably where Grigori's got most of his stuff, right? I mean, somewhere in that area.
Shout out Grigori for being a genius, a secret Russian genius. Well, before I was trying to transition to appreciation, but do you want to talk at all about that other table before we transition?
No, I mean maybe I'll bring up something as you come up, but no, let's switch it over.
Well. Now, folks who are listening, if you want to pull up the sorted neighborhood appreciation summary, this is in order of appreciation. Let's just talk about the last 10 years, Tim.
Yeah.
2015, we're coming out of homes a lot of them have recovered since the crash.
Yeah.
Right? I think we picked a really good 10-year span because we have COVID is in there that led to a dramatic appreciation and craziness, all the low interest rates and the multiple offers. Then if you look at an appreciation line of most of these neighborhoods, right around 2022, it is either going to dip or it's going to level out. And so I like this slice of 2015 to 2025 because I think it's like a good median slice. Does that make sense?
Yeah.
I can't predict the future. And maybe it'd be interesting to back that up with other data, right? What if we went like 95 to 2005 or 75 to 1995? Unfortunately, the data, the analytical software that I use only goes back to like 2000. So,
Yeah. I mean, it is a good slice. And, I think it kind of reinforces more than anything that if you hold for a long period of time, and if you're doing long-term holds, you're going to do well even if you mess a lot of things up.
Completely.
Because that appreciation happened. Those loans also got paid down, and most of those properties, if not all of them, cash flowed over that time period.
Completely.
And they got tax write-offs. And you add all that together, and it's really about stacking up more of them rather than worrying about like getting the perfect one each time. Right?
So let's go top 10 appreciation neighborhoods.
Okay.
Jordan, number 1. Hawthorne, Fowle.
By the way,
McKinley. These are all north.
All three of those show up in high cash flow areas too.
McKinley's 5. McKinley is 4. Willard Hay.
McKinley's one of the few that has two duplexes with 3 bedrooms. So one bedroom unit and a 2-bedroom unit that actually cash flows. That's a pretty rare thing.
No kidding.
It does in McKinley and Jordan.
So
and Hawthorne.
once we get to number 6, Beltrami, that's the first northeast neighborhood.
That sounds northeast
we hit,
to me. Yeah,
right?
I recognize that. Yep.
Where is Lind Bohanan? Can we get a check? Where the heck that is? Yeah. I don't think I've ever sold a home, and I got it here pulled up on Google. It's in north.
It is.
Well, okay, it's way north, so it's like east of Shingle Creek. Probably on the border of Brooklyn Center.
My map doesn't even show that.
Yeah. So, again, going back, where did my table go? Of the top 10, St. Anthony East and Beltrami are the only 2 that are not in north out of the top 10. Shout out to Tim and I. We did we just said, let's each guess.
Well, they're right next to each other.
Those 2 are Beltrami and St.
And
Anthony
they're right
East.
along the southeast-northeast border. So I used to call it the poor man's U, basically where the University of Minnesota was, but you didn't pay University of Minnesota pricing.
Okay.
I guess I'd maybe call that a little bit more Wyndham Park and Northeast Park, just kind of outside of Southeast a little bit, but yeah.
Well, to pat ourselves on the back, Tim and I both made a prediction before we crunched all these numbers. You said St. Anthony. Maybe you technically said West.
I said St. Anthony West.
But whatever.
Yeah.
Yeah, we're going to give it to you. And I think I said Willard Hay.
You did.
So we both got into the top 10, and we're both essentially right. I mean, I'm a little bit more right than you.
You are. Percentage-wise, which is what we were going for, you won.
Yeah.
Dollar figure-wise, I won. So, hey, there we go.
Well, why don't you talk about the math surrounding that? Because that's interesting, right?
Well, part of it is you spend dollars, not percentages. So, yes, of course, it's nice to have a high percentage, but if you start with a higher number and it goes up even at a lower amount, you just get more dollars.
Let me just break this down for you guys. If you bought in Jordan for 72 and then you sold it 206, which is 2015 to 2025, you just made what we'll just say 130, give or take.
Yep.
But what
was that percentage then?
That percentage is 186%.
Yeah.
However, if you bought something in, help me out here. I need to find a big appreciation number. St. Anthony West, okay.
Because that was a higher, that was a...
Well, let's say East, because I don't know why I'm not seeing St. Anthony West on this chart. Okay, in St. Anthony West, you bought at 167 and you sold at 364. So your percentage is only 117. However, your net gain is 197 compared to in Jordan, my 134.
Yeah.
Now, if you assume that you have X amount of dollars to spread around, and I could have bought a couple properties in Jordan to your one in St. Anthony, I'm still probably doing better. But that's not like real life, right?
Yeah, and I mean, yes, correct. And so if you're just from a purely investment point of view, percentage-wise, you're simply doing better with your deal. But yeah, if you've got one to go off of, buying in a nicer neighborhood's a little better, right? That kind of thing. They're easier to manage, all that.
So what else was surprising appreciation-wise? Let's talk about the losers, huh? The bottom 10 appreciation neighborhoods: Echo, Lowry Hill, Stevens Square, Whittier, Lowry Hill East, Lyndale, Marcy Homes, Kenwood. Uptown, basically, / downtown.
And a little bit of Southeast Minneapolis for good measure. That's the Mercy Homes is basically South Minneapolis, like it's University of Minnesota students. We kind of talked about this when we were going through it. A lot of those don't trade very often, and
it's a bad data set.
Yeah,
there isn't a lot of single family, so we could almost delete that. But yeah, I mean, Uptown got crushed. We'll take Lowry Hill. Median sale price in 2015 is $532. Median sales price in 2025 is $587. $532 to $587. That's $55,000 total. Only a 10% gain in 10 years.
I don't think you see that very often, but you can see that. There you go. You can kind of see that can happen in some places for sure.
And I guess, a lot of folks aren't going to be surprised, Uptown-wise, being at the bottom. I guess middle of the road is everything else. I figure out if anything else stands out to me. I mean, you have to keep in mind, folks, too, like some of these, there just aren't. We're taking data from the whole market. We're not just looking at 2 to 4 unit data for appreciation. Of course, 2 to 4 unit properties follow the greater market. So these aren't exact numbers for duplexes. And of course, I think there's condo markets that have done probably way worse in some of these areas as opposed to single family. I think that's
so the stuff that you get really close to downtown Minneapolis, you've got a lot of small condos and stuff like in those areas, that kind of stuff, right?
Exactly.
Like maybe this Ventura Village might be a good example of that, right? Isn't that right on the downtown border?
Yeah, Ventura
Village, South Minneapolis, but downtown border.
I believe that huge apartment building that's like really ugly with all the different colors that you see from 94. I'm pretty sure that's
Riverside. What's it called? Riverside.
Cedar Riverside.
Yeah.
I believe that's real close to Ventura Village.
Okay.
You still did all right? 90% increase in 10 years. Almost doubled your money.
There you go.
The biggest net gainers would have been the East Isles, right? So these are the high dollar areas that went from a 205 net gain in the East Isles. And then I want to see that Tangletown did really well. Shout out to my buddy Matt Poling, bought a house in Tangletown. He's doing well. 226 net in Tangletown. They went from 323 to 549. So that's only a 70% increase, but net-wise, they won.
Yeah, so I think if you're kind of looking at this data, one of the things that I'd look at if it were me is I would try to look at this and say, okay, what area has enough cash flow to make me happy or the potential for enough cash flow, right? And still appreciates well. And then where do I want to live? And where those three intersect, there's your Venn diagram.
Completely, man.
Right? I mean, keep in mind, like, I think sometimes, though, people get really picky and they're like, I'll only do this. I mean, at some point you got to give. I mean, if you pick a small enough area, when we look at some of these, I'll give you an idea. Just taking a random, in Minnehaha, there was only one duplex that sold with 4 bedrooms in the last 12 months. Okay. I think Minnehaha is a fairly big area with lots of properties, but there was only one there in that specific little small area. Now, I bet you if you go a couple miles in any direction, you probably find more. But the point is if you get very specific, you have to also then get either very aggressive on that one property you see, or you're going to have to give on something, right?
And my experience working with lots of buyers in Minneapolis is that people aren't getting ultra specific when it comes to small multifamily. Mm-hmm. It's a single family buyer's conversation to say we want to be in Longfellow area.
Yeah.
Right. I've never heard a duplex buyer say that ever.
Got it. Well, I just wanted to point it out, but yes, good point.
But, there's going to be people listening who are thinking about neighborhoods, single family wise, and maybe they'll use this. So I think it's relevant for you to point that out.
Sure.
Let's talk about future. Okay, so the other thing is, just because this is what happened in the last 10 years doesn't mean it's going to happen in the next 10, right?
Correct, yeah.
So, let's talk about the value proposition. The median price in Hawthorne is at $250 right now. And then let's go down the list a little bit. Where if I could buy in Standish at $306 as opposed to Hawthorne at $250, I think Standish is absolutely going to crush Hawthorne in the next 10 years because that value proposition from the perspective of someone who's looking at a crime map doesn't make sense.
I think of Standish as in south, but I'm looking for it on the map. Whereabouts is it? Wait, no. I don't know these. So for those of you who don't have the neighborhoods memorized the same way, I mean, some of them I've heard of them, but I don't necessarily know them all.
So think of Powderhorn.
Oh, there it is. I just see it. It's next to Bancroft. Is that
So
right?
picture, folks listening, picture the Powderhorn neighborhood, and you know how as you get south going through Powderhorn, it's going to get nicer and nicer.
Mm-hmm.
Standish is similar to like all of South Powderhorn.
Okay.
So I don't know, dude. I'd live there. Is what I'm saying. And I don't think that value proposition is in line. If you look at a crime map, compare it to Hawthorne. I mean, tell me if I'm wrong, folks. So my prediction would be that, Hawthorne doesn't necessarily do another 165% in the next decade.
Yeah. And gosh, I'm usually pretty opinionated, and I just don't know. I'll tell you this. I don't have a good feel for it right now. And I say that because a lot of the things that traditionally were true are not necessarily true now, right? Like I would have been, if you would have asked me 5 years ago, I was bullish on Uptown, but I'm not right now, right?
Yeah.
I was very down on North Minneapolis. I'm kind of more up on North Minneapolis more than I've ever been in my adult life. Not that I'm like betting on it, but the
Not
things
that you're
hear,
buying anything there.
I'm not. You're right. Okay, I'm not buying anything there. But my brother's a firefighter, and they have less problems and less calls and less issues in North Minneapolis than they do in South right now.
Really?
Yeah, by a lot. Yeah, in terms of just dispatched calls, right?
Really?
Yeah.
Well, Phillips has always been the highest crime, right?
But
Which is part of South. It's hard to paint with such a wide brush and just say South Minneapolis.
Correct. Okay. Correct. It is. But I think if I'm calling South Minneapolis, I'm just gonna say anything in the 30s or under.
Yeah.
That part of South Minneapolis,
I completely
is
believe
getting
that.
just hammered.
Lake Street.
But most of it, and most of it right now, or a lot of it, is fentanyl and tent cities. And if those get cleaned up, I think that problem goes away.
Yeah.
But until they do, I see people on the news saying, can't live here anymore. People are pooping on my porch and stuff like that, right?
Yeah.
In various areas. And so I don't know. We'll see. I mean, frankly, North has been abused by so many landlords and tenants. I'm talking the properties themselves. They're in bad condition, a lot of them, right? And so that's a problem with that whole area. There's a lot of really small places too, right? Like you do have some big grand places, right? Especially in some of the bigger streets, right? You'll have really large duplexes, but you've also got a lot of that junk, right? Those really small houses that were...
I disagree a little bit. I think a lot of those small houses are like 20s builds.
Okay.
And that is a product that people want. Like modest, centrally located single-family homes are in high demand. Compare that to like the big-ass falling apart properties of Phillips and Central and Powderhorn. I almost like the housing stock in North. So I'm agreeing with you on being bullish in North in general.
Yeah.
I just think that maybe what I'm saying is I don't know if we're going to see the same list 10 years from now.
Oh yeah. I'm going to wait and see. I'm not at making predictions. I don't know that North is going to make a big comeback, but it wouldn't shock me.
Yeah.
I think at some point there's enough wonderful things about Uptown that will come around. I just don't know when, right? I think we had Matt Brown. He said it might be 10 years, right? And he might be right. But I don't know. I don't have a good prediction. If I were going to predict anywhere, I've always been a fan of this, but I would actually predict both Southeast and Northeast Minneapolis. I think both of those, they just have nothing bad going for them right now, in my opinion.
So Longfellow. What are the other ones?
Yeah.
Wouldn't it help to have a neighborhood map in front of us, Tim?
Yeah, I'm looking at one, but I mean, just like, all that stuff right around the University of Minnesota and then further north and even further east going right on the St. Paul border. I think all of that stuff is in pretty good shape. We're not seeing, or at least I'm not hearing about major amount of crime.
Yeah.
I know a lot of people like to live there now. It's being gentrified, or it has been gentrified, and there's some cool things. It's not as cool as Uptown. Like Northeast Minneapolis, I grew up there. I love it. There's some really cool things there, but it doesn't have nearly what Uptown had. Now, a lot of places have moved out of Uptown. If they all relocate to Northeast Minneapolis, which we're seeing breweries and stuff like that, I mean, maybe that becomes the new Uptown. I don't know.
Well, like the starter home buyer, the single family home buyer that's driving a lot of this appreciation, they're not looking for like Uptown, North Loop type stuff. I think they like the vibes of Cooper and Longfellow and Howe and Hiawatha, where you have like a Blue Door type establishment, right? And what is that? The Riverside Cafe. And, you know, some like little independent, quaint commercial type stuff. The kind of stuff that Kurt Pauly is buying up.
Yeah. And then the other area that we haven't really talked a lot about because it is kind of the higher end, but there's the Kenwood, Lake of the Isles, East Isles, you know, stuff over by the lakes. It's hard to imagine that that's going to go down. But I know people who live there, and I know some people are like, yeah, we're in the $1 million houses, but we have a tent city, right, you know, on our block or whatever.
Yeah.
And so they're sour about that, and I guess I would be if I was over there too. And with rising insurance costs, I don't think anyone's ever going to move out of there. But it's definitely an area that I wouldn't be as excited to jump into, or as I would have died for one of those places a decade ago. Now I'd be like, I don't know if I want to pay those taxes and insurance.
On those big ass houses, yeah.
It's getting expensive.
And you know what's really interesting, folks, is if anyone is curious about a particular neighborhood, you can shoot us a DM or comment, and we will send you a screenshot of the graph. Because these graphs, most of them, like I said, they kind of taper off around 2022. But some of these graphs are interesting, right? Like the Uptown ones flatten out way earlier.
He's specifically talking about a graph of the appreciation.
Exactly.
So you can see a line
like
of how the line is moving. Yeah.
And the graphs that are real jagged means less data for the most part, right?
Yeah, because a small amount of transactions creates a bigger spike or
Kenwood.
change.
I'm looking at Kenwood right now. Right now, the average median single family, well, here, that was all property types. Average median single family right now is about 1.2 million in Kenwood. It was 922 15 years ago. So percentage-wise, that's really not that great. That might be one of the worst. And then, you know, from, again, maybe we're just dealing with a small data set, but from January 2015 to May 2019, it just went down a couple percentage. So anyways, I guess maybe the safer money is in those starter home neighborhoods, for sure.
Yeah, which is what a lot of the people we work with end up buying, so that makes sense, right?
Yeah. And I mean, I've been to some homes in Kenwood. For old friend of the family had just one of the most amazing homes. Is a successful commercial real estate guy. Mm-hmm. I mean, it is a lifestyle move, and it's cool. And I could see myself being at the point in my life maybe someday where I buy a house over there because, you know, the lakes aren't going anywhere.
Yeah.
Anything else, Tim?
No. But if you're recapping, Minneapolis has the most transactions. If you're looking to invest, you're still going to find a lot of properties there, and it still is excellent appreciation, and it has cash flow if managed properly on the right deal. And that's hard to find in the current market, so I think it shouldn't be ignored. A lot of people ignore it. They worry about how tough it is to deal with Minneapolis. And my thought on that is, if you're willing to stomach dealing with Minneapolis, you're going to make a lot of money.
And dealing with Minneapolis, I mean, if we just took a poll of like South Minneapolis residents, let's just take the people in Longfellow, in their single family homes in Longfellow, and we ask them like a survey, and we say, how has it been dealing with the city of Minneapolis? A lot of them are just going to say like, what are you talking about?
Yeah.
Right?
Sure. I'm thinking more like as a landlord, right? Because Minneapolis just now has the longest eviction process in the Twin Cities.
Yep.
It's 2 weeks longer than anywhere else. And we can get into that more on another podcast. So that would be one thing. And dealing with their inspections and stuff, which has not been a problem for us, but it can be.
Yep.
I should say the rental inspections. The rental inspectors I've really enjoyed. The housing inspectors, not so much. I think they nitpick you, and I think that they...
So you're talking permits versus a license right now?
Yep. The permits, not a fan. License, rental license, I think they do a good job. So that's my take anyway.
We should have your brother on the show. Would he do that?
Yeah, I asked him. I think he would.
Really?
Yeah.
How long
Certainly.
has he been a firefighter?
That's a great question.
As long
6,
as you've
8 years? I don't know.
Okay.
He was a CPA too before that.
No kidding. Interesting guy, huh?
Yeah. Yeah. And I think his would be less real estate related, but if you just want to hear what's going on around the Twin Cities, which actually I think is important to real estate investors. And, again, I mean, without getting super graphic, he tells me he sees people crapping on the street every day. Every single day he sees someone pooping.
Well, I'm super... yeah, man. So I listened to this podcast the other night. It was there's this podcast called the Ice Coffee Hour, hosted by Graham Stephan, who's like a YouTube influencer on him, right?
I know who Graham Stephan is.
Okay, so he talks a lot about just personal finance. He's a real estate guy, and they had this guy, I forget his name, but he has been investing in like trends. So he's an investor and he tries to keep his ear to the ground. He's got an amazing, he makes like 70% a year is his record trading stocks. Wow. So that's insane.
That is insane. Yep.
And for example, like Beanie Baby trend or something becoming cool or something becoming uncool, he's going to Target in the real world figuring out, wow, all the Elmer's glue has sold off the shelf. Oh, it's because there's this phenomenon in the 2000s where kids were making slime at home with Elmer's glue. Who owns Elmer's glue? Oh, it's the super boring company that grows 2% a year. Okay, I'm going to buy a bunch of options, blah, blah, blah. That's what he does. I would be so interested to do that kind of thing, but for real estate, but you'd have to talk to the firefighters. Yeah. You'd have to talk to like demographics, like a professor, economics professors, right? Where are the migration trends and moving and all that kind of stuff? And if you really made a dedicated effort to like, it's going to be my part-time job to understand everything about Minneapolis, I think you could make some really solid. Of course, no one could have predicted COVID or George Floyd or blah, blah, blah. So there's always going to be things that will throw a wrench in your plans, but it would be cool to have more people on the podcast who can share that kind of information with investors.
Yeah, and I mean, I tell you what, I think Minneapolis has a lot of cool things. It has, its park system and some of the other stuff is just amazing. So I think there's a lot that Minneapolis has to offer, and I guess I agree with you that I think that like you could find out what that is, but it's just weird. I think that Minneapolis, they just need to clean up their policing act, get crime under control, and allow businesses to come back in, and the place is going to be amazing. Think of like how cool Northeast has got. If you could bring Uptown back, it'd be stellar, right?
Yeah.
And then have you ever been? So this is a little off topic with real estate, but just one of the coolest things I think in all of Minneapolis is it was called Sea Something or Another. I want to say Sea Life, but that's not correct. And it was a restaurant in Minnehaha Park. Right by the falls.
Sea Change.
Sea Change.
I think that's it, right? Sounds right.
It's something like that, yeah. Anyway, doing that in the parks, having restaurants in the parks, and they could do that in more than one park. And I think St. Paul should do that too. I mean, it'd be amazing if you had one in Como, one in Phelan, a few of these other parks. I mean, we've got a lot to offer. I just think we need to get back to our roots and it'd be amazing. So,
and how do we pull the triggers on that? I mean, we need investment, period. People need to be incentivized to take risk on commercial real estate and entrepreneurship. And so we need to push legislation or policies or whatever, all that stuff's so above my head, to promote investment.
So something crazy like that, you need to make permits possible, right? Because that's a weird one, right? Where you got to get a lot of approvals to have a restaurant in a park.
Yeah.
But
just one example.
But just businesses in general. Yeah. I mean, businesses in general, they need to have parking, right? So something like, you think of all these areas where they've changed the streets, and fine if they have parking, but not fine if they don't, right? Like if you're in Uptown and you want someone to come to your business, they need to be able to stop in front of your business, walk in for a reasonable to nothing fee, right? Maybe they pay $1 or something for parking. It can't be $5 or $10, or they're going to go somewhere else. They need to be able to walk in, get what they need, get back in their car and leave,
Yeah.
So those are some of the things I would think of anyway. Or have, like back in the day, there was that, if you have a parking ramp, but you have a lot of cool places you can walk to, I'm thinking Calhoun Square area. Yeah. That was fine because no one would mind paying $5 because they could go to an hour or even a little more because they could go and they could go to 5, 6, 7 places all at once.
Mm-hmm.
You know.
So parking's one point. People need to feel safe.
Yeah.
And then the entrepreneurs need to, I guess, have a good enough idea that.
And be able to get things passed. You know, like if you need a liquor license, it has to be attainable. As long as you're not breaking laws, you should be able to get it. You know, that kind of thing, right? I mean,
yeah.
You know, but I think that there's a lot of cool restaurants and places in Minnesota, in Minneapolis, in the Twin Cities, and when people feel good about going out, and part of that's the economy too, right? And we're going to need a little bit of a bump there where people feel good about going out and just spending some money. And yeah, I don't know.
Cool. Well, thanks for everyone thanks for everyone who showed up to the meetup last night. Again, if you guys don't know, first Tuesday of the month, we're doing On Location with Abby and Vicky next month, aren't we?
Yeah.
Did they commit to that?
I'm pretty sure.
Abby, Vicky, text us. Text us if you don't want people showing up at your place.
And if you don't listen all the way then, I guess we're going to be there.
Yep. That's what you get. So, yeah, clients, friends of ours, clients of mine, I guess, through Jeff.
We have to do another one after that. I say we do another. I say we do like a house hack for beginners kind of thing.
Totally. Maybe Kevin would host. Kevin, what you say, Kevin? I think the On Location ones people really like. And then people want us to do this, but for the suburban multifamily.
Mm-hmm.
And
we'll work on that.
And we will work on that. I personally think we have to figure it out between you and I, Tim. I think we could fit that into one episode and one. I don't know if we could talk about like the western suburb small multifamily for an hour. I think it almost has to be a whole metro thing, but
yeah,
whatever. And we're going to end up just talking about like Brooklyn Park, Brooklyn Center, Hopkins, St. Louis Park.
Yeah.
The suburban multifamily is very consolidated. Or not even Maplewood. What would it be on the East Metro? Who's got small multifamily? West St. Paul has some.
This is not.
Or I'm sorry, East side of the Metro. There's really not a whole lot.
The first thing that came to my mind is New Brighton, but that's still a little west. East. Oh, you know what we didn't do? Okay, I thought of this. We have to include Stillwater when we talk about.
Stillwater's got multifamily for sure. Yeah, that's probably
that's
one
pretty
of the biggest.
far east.
Yeah.
It probably doesn't hit a lot of people's radars, but for the people who are out there, there's quite a bit out there, and they've done well. Some of my house hackers who have lived rent-free, I can think of 2 of them that have lived rent-free in Stillwater. Now, I'm not saying you do that today, but
Brian Andrews.
Yep.
We don't have to, put people's personal information out there.
Yeah, the other one.
Anyways.
Not to mention the other one is a couple who broke up. So.
Oh, sure. Yeah. So sorry.
So I'm going to keep the noise. I'll keep those names to myself.
Well, cool, guys. Thank you for watching. Please rate and review and share with your friends. And we love you guys. And see you later.
Cheers.
That's it for today's show. You can visit the TwinCitiesRealEstateInvesting.com website for show notes, tips, tricks, and other local real estate investing information. Adam and Tim would like to meet with you. To schedule a one-on-one meeting with either Adam or Tim, go to TwinCitiesRealEstateInvesting.com/schedule.